190 minutes, 800 points lost and 3 lakh crore rupees wiped out. The sell-off on Dalal Street worsened this Tuesday. The stocks kept falling like 9 pins. One look at the Sensex chart and that will tell you the kind of carnage that we saw today. 800 points crash, and that in a single day. That is the biggest single day fall that we've seen in the last 6 months. And look at the Sensex, it's closed at 22,951, below the 23,000 level. The Nifty, that broke below 7,000 for the first time in 21 months. The Nifty, since the start of this year, has given up 1,000 points. Today, down 240 points in trade. Banks, the banking stocks were the biggest culprits. Once again, that index is now below 14,000. And you know, this is just half of the record high levels of about 28,000. The mid-cap saw deeper gashes. The index lost over 400 points as over 500 stocks hit the lower circuit on the Bombay Stock Exchange. Anuj Singhal joining us to wrap up today's market action. Anuj, you know, I don't even know where to begin. What a disastrous Tuesday.
Yeah, I mean, this year hasn't been good, and even by that reckoning, today was the ugliest day. I mean, today makes the last few days feel better. I mean, it was that kind of a day. Today, what you've had, led of course by global cues, the global markets were selling off, global commodities were selling off, except gold, of course. So that was global in nature. But the way the market has completed its 2,000-point correction now, and the Nifty slipped below 7,000 and did not rise at all, tells you that the smart money believes that there's more to go. And you know, what was interesting was that today it was broad-based. There was not one sector or one stock that you could point out and say, this is what led our market lower. It was across the board sell-off. Advanced decline ratio of about 1:14 is what we had in today's trade. Look at the kind of sell-off that we've had in individual names. And the stock that really stands out now, or the set of stocks, is HDFC and HDFC Bank. HDFC Bank, both were avoiding the sell-off for last few days, but that's where the sell-off reached today. Reliance as well was down about 4%. These were the erstwhile stronger stocks where we saw sell-off take place in today's trade. Not just that, you know, stocks like ITC, Infosys, all the index heavyweights. ICICI Bank today, for example, slipped below the 200 mark. And since 250, I've been hearing that this has become a bargain buy now. Look at some other stocks, Maruti, Tata Motors, Mahindra and Mahindra. All these stocks were selling off in trade. And the big worry point now is what's happening outside the index. These are not your small mid caps. These are large mid caps. Some of these stocks have more market cap than some of the index stocks. And look at the way they fell. Ashok Leyland, Wockhardt, Page Industries. The list is long. The only silver lining is that for last 2 or 3 days, we have heard people come and say that this is a bear market. You may want to hear some more voices like that and believe that you're closer to the bottom. But at this point in time, the global screen is telling you that this route is only going to extend.
You know, so Anuj, that you pretty much preempted my next question. You know, it feels like we're in a bottomless pit. What's your sense? Are we going back to 2008?
Yeah, and you know, that's an uncomfortable question, but in stock markets, you have to ask yourself this question, that is this repeat of 2008? For longest, people have been saying there's nothing similar to 2008 because we had Lehman at that point. But look, some or the other issue will crop up, and the market would always start to factor that in before that event takes place. So that's a risk. At least the global equities are telling you that there's something wrong going on, which we at this point in time can't pin down. So the global equities are in a bear market, and we are part of that. The big worry for me would be the domestic flows. We spoke to 2 big fund managers today, and both of them said that inflows have slowed down. There's a risk of redemption as well. So that's going to be the big worry. What started today with the resilient stocks falling, I gave you the names like HDFC and HDFC Bank. That would be the next set of stocks to watch out for, not just these 2, but other stocks which have been resilient so far, because profit preservation would now become the theme, cash preservation and profit preservation. So that's a set of stocks that you got to keep an eye on. And at this point in time, the bears have no reason to cover their shorts. Every day they're seeing that the market is making a lower low and they are running their shorts. So at this point in time, there's no reason for them to book profit. This market needs a trigger to scare the bear. And at this point in time, it doesn't appear that, you know, that trigger is around the corner.
Right, thanks, Anuj, for joining us with your analysis. That's Anuj Singhal's reading of where Dalal Street is headed. Let's get